Most traders don't lose because the market is hard. They lose because they have zero structure. In this video, I'm going to show you the exact process I use for the first 90 minutes of market open. The exact same process I use and teach my community to catch trades like these. Most people treat the market open like a casino. I treat it like a checklist, a sequence, a system. So in this video, I'm going to break down exactly what I look for from 9:30 a.m. EST to 11 a.m. EST, the structure, the confirmations, and the triggers that keep me consistent while everyone else is reacting, chasing, and blowing up their accounts. So let's get into it. So part 1. So for the first 30 minutes of market open, I am on the 2-minute time frame and I go based off 2 levels. I market the pre-market high and then pre-market low. So these 2 levels are the most critical levels on the day. Once it breaks above or below, that is essentially where the real trend starts. So part 2. Once I see a breakout of either level, that is essentially when I start looking for an entry. But I always look for a specific trend and the setup. So part 3. Finding the entry. These are my go-to setups. I always look at the trend and the volume chart, and I always look for a specific candle setup. I call these the Pac-Man candles, and that's why I also call it the Pac-Man candle setup. This is an example of us pushing towards the upside, and this is an example of pushing towards the downside. Stop loss will always be on the previous candle. All we want to see is candle containment. So part 4, what does contain mean? So let's say, for example, we're pushing towards the downside, right? All you need to see, as long as this candle doesn't break below the previous candle's low, this is essentially a contained candle. So check this out. Doesn't break below, does not break below either. These are contained candles. So let's say we're pushing towards the upside as well. Meanwhile, it doesn't push above the previous candle's high. It is contained, as you can see right there, pushing towards the upside. So part 5, moving forward, just in case if you don't find an entry during those 30 minutes of market open, this is essentially where the 5-minute time frame comes into play. It reduces all the noise. That's why I also go on a 2-minute time frame instead of the 1-minute time frame for the first 30 minutes of market open. If I go on a 1-minute time frame, that is a bunch of noise. So step 6, same thing. We need to see a breakout above or below the pre-market high or low. Once it does that, we can essentially start looking for an entry, but also always look for a specific trend, setup, and candle to show up. So step 8 means, so now that you know what a contained candle means, we can essentially start looking for a setup. This is the exact same setup as on the 2-minute time frame slideshow. Stop loss will always be on the previous candle. So I'm not sure if I told you guys what the candle means. So on a 2-minute time frame, usually it tells us there's a small consolidation, and also on the 5-minute time frame, there's a small consolidation as well. It either needs to break above or below. Essentially, that's it. So on the 5-minute time frame, as you can see, there's a small consolidation. It either needs to break above or below. So if it breaks above, that is no longer a trade because the stop loss will be so much wider and you don't want to risk losing a lot of money. So you see we're in an uptrend, right? And it's not breaking above the previous candle. This is essentially a play we can take. So also the volume needs to match the trend as well. So the same example is pushing toward the downside, but meanwhile we are not pushing below and making a new low. This is essentially a Pac-Man candle. It's a contained candle, and we could take this play as well. So still step 6, the same thing with these examples. We are in an uptrend, but it's not breaking above the previous candle's high, and the volume is very bullish. So now in this example, we are pushing toward the downside as well. 5-minute time frame will always reduce the noise and giving the clear price action. These candles tell me that there's a small consolidation happening, like I was mentioning to you guys earlier. But the bet is whether it breaks below, making a new low, or not going at all. And we will never enter if it breaks above. Part 9. So how do we confirm these trades? So this is essentially confirmation no trader talks about. So these are called the bids and asks. So essentially what they are is a little auction. This is what buyers are willing to pay, and this is what sellers are willing to accept from the buyers. So step 10. So how do I use this to my advantage? Let's say we're pushing towards the upside, right? We always need needs to see a breakout above our zone, so the middle of the zone. So count for 5 seconds once it gets into the zone, and if the bid and ask are getting lifted, that's our time to enter. So what do I mean by getting lifted? So essentially what you want to see is this buyer number increase in value, making up the spread wider. So you see the spread right now, it's like over 19 cents. So now towards the downside, you want price to get in your zone, the middle of the zone, and count for 5 seconds. And for this, all you need to see is a bid and ask break, meaning you want the buyer number to get closer to the seller number. So you can tell by how tight the spread is, it's like 2 cents. That's how you know the bids and ask are breaking. Now, transitioning to my indicators. Now that you understand the structure, the entry, and the confirmation, let me explain how my indicators work. So this is the most important part as well as catching the trades. So 200 moving average. So this is one of my most powerful indicators. This indicates where price will most likely get rejected. It's this yellow line. I always look at it at a 2-minute time frame through the daily time frame. So the 5-minute time frame, 10-minute time frame, 15-minute time frame, 30-minute time frame, 45-minute time frame. It usually pops up in different price ranges when you switch time frames, and these are my settings. Let's move forward. So 400 moving average. So it's basically like the 200 moving average, but it's only used on a 5-minute time frame. This is where price will most likely reject as well, and these are my settings. So VWAP, volume weighted average price. So this is where price will most likely get rejected as well. Like the 200 simple moving average, you can also take rejection plays with this indicator. These are my settings. And let's move on. Open price. Open price is basically where price has opened on the day, like right on the spot. So I use this to tell where price opened on the day, and this plays a huge role on one of my strategies as well. It's called the explosive levels. Price can balance out this indicator. Open price is a critical level as well. So also the opening range breakout. This is essentially the first 15-minute candle high and low. This is a critical level as well. I take break and retest off these levels and absolutely love this indicator. Also moving on to volume indicator. So this is my go-to indicator when I want to see how dominant sellers or buyers are at the current state. So also exponential moving average. This follows where price is going. I use this as an essential safety net as well. If it breaks below the EMA, for example, if we're pushing towards the upside and it breaks below the EMA and closes below the EMA, I would exit out the trade. So depending on the time frame as well, your entry point and how far the trade has gone into profit. So let's move on. Back tested and live examples. So now let's move on to back tested and live examples of what I look for the first 90 minutes of market open. So let's start with the 2-minute time frame examples. All right, let's move on. So now this is an example of QQQs pushing towards the upside with a nice bullish candle. So check this out. So I already marked out the NTZ, our no trading zone. So the pre-market high and pre-market low are already marked out. So what you want to see is a break above the pre-market high or pre-market low. So for the first 30 minutes of market open on a 2-minute time frame. So let's check this out. So we're breaking above now. All we need to see is a nice Pac-Man candle. So check this out now. So you see how it's not breaking above the previous candle's high. This is essentially a nice Pac-Man candle. So you can take this towards the upside, but the stop loss, look at the stop loss, how wide it is. It's not that wide, but initially it's pretty wide. But check this out. What you need to do first, mark out the Fibonacci. All you need to do is that. So mark out the Fibonacci. Did it hit 0.5 Fibonacci? It did not. So essentially these two levels right here in red are the most critical levels on the Fibonacci, the 0.382 and also 0.386. So these two levels right here in red are the most critical levels on the Fibonacci. So 0.236 and also 0.382. Anything below 0.382 is essentially no more of a trade. So why do I say that? It just makes the stop loss so much wider, and also the trend has already like depleted significantly. So check this out. Let's break and retesting these two critical levels right now. So all you want to see is a break above the zone, and essentially you can take this towards the upside. So check this out. I know the bids and ask for sure got lifted right here. I took this trade in a real time. So I'm gonna show you a live example of what you need to see in order for you to take this trade. So in this example, you need to see the bids and ask get lifted since we're pushing towards the upside. If we're pushing towards the downside, you need to see the bids and ask break. So you want the spread to be higher. So you want the spread to be wider. So check this out. QQQs is right here, pushing towards the upside, right? And this is essentially where I sought out an entry. entry towards the upside. I enter towards the upside right here, I'm pretty sure. Wait, let's go back. Check this out. Once it got into the zone, essentially this is where I entered towards the upside. So look at the spread now. All you need to see is the spread get wider. So check this out. Check this out. 2 cents wider. That's the bid and ask getting lifted right there. And essentially you can take it towards the upside. So simple as that. And look at this trade. It absolutely freaking went. It paid a lot, bro. This trade absolutely freaking went. So I had to target it as some psychological numbers. So the next psychological number that I had was 615.5. So what are psychological numbers as well? So psychological numbers are essentially 0.5 cents. So 50 cents to a dollar move. So that's it. So now let's move on to the next example. And this example, I'm going to show you a trade pushing towards the downside. All right, moving forward. This is an example of Meta pushing towards the downside. So let's get into it. So as you can see right now, we marked at the pre-market high and pre-market low. All we need to see is a breakout above or below the pre-market ranges. So check this out. Right now, we're trying to break above, getting rechecked off that pre-market high. That's essentially why I tell you guys that these two levels are the most critical levels that the market needs to break for in order for us to actually see a trend. So check this out. So we're pushing towards the downside and now it's break and retesting that pre-market low level. So this is essentially very, very crucial as well. But check this out. I always look for any confluence that's stopping us from taking this trade. So for example, the 200 moving average, like I was telling you guys. So you always need to see 200 moving average on a 5-minute chart, 10-minute charts. Is there any sitting right here below stopping us from taking this trade towards the downside? Check this out. There's absolutely nothing. So right now, this trade looks absolutely beautiful. So nothing is stopping us. The risk to reward right now does make sense to me. So initially, we'll be watching this trade towards the downside in the specific zone. So we could watch this trade below 653.2. And if the bids and asks want to get broken in that zone and holds below for 5 seconds, that's essentially where we would enter towards the downside. So I live recorded this trade as well. So check this out. Let's go into real time. So right now, this is essentially the same trade right now. So check this out. Breaking below, all you need to see is a break below the zone. And if it holds for 5 seconds, that's essentially your time to enter. So check this out. Getting into the zone. All right, got into the zone. Did the bids and asks break? So check this out. We'll go back fully. I'm pretty sure I didn't enter there. So check this out. Once I got into the zone again, 3, 4, and then 5. Is the spread getting tighter and tighter? The bids are holding right there. Now right there, the spread got tighter. Check that out. 4-cent difference. So that's essentially what you want to see. You want to see the bids and asks break. And look how this trade went. This trade was absolutely insane. So look, absolutely insane trade. So it's simple as that. All you need to look for is a nice Pac-Man candle, and to confirm the trade, all you need to see is a break above the pre-market high, pre-market low, and essentially a nice trend, and then the bids and asks confirmation, like I'm teaching you guys right now. So for the next example, I'm gonna show you an example of when not to trade. All right, so let's move on. So this example is an example of when not to trade. So let's start off by marking out the pre-market high and pre-market low, and essentially marking out your zone. So now that's done, all you need to see is a break above or below the pre-market range. So as you can see, it's just kind of like avoiding it. Right now, there's no trends, nothing starting up. In order for us to take a trade, right now, just consolidating within the pre-market high and pre-market low. So check this out. So absolutely no trade. So let's move on into the 5-minute time frame examples. This is after 10 a.m. EST. Then after 11 a.m. EST, that's our trading window. So for the first 30 minutes of market open, 2-minute time frame, and then the last hour, the 5-minute time frame. So 10 a.m. a.m. to 11 a.m. 5-minute time frame, 9:30 a.m. to 10 a.m. 2-minute time frame. You got that? All right, so let's move on. This is after 10 a.m. EST. So for the first 30 minutes of market open, we are on a 2-minute time frame, and then after 10 a.m. we are on a 5-minute time frame all the way until 11 a.m. EST. So why do I go on a 5-minute time frame? I usually go on a 5-minute time frame because after like such a long period of time, there's a bunch of noise. So the 5-minute time frame reduces all that noise significantly. So right now, what we want to see is a break above or below the pre-market high or low. So I'm gonna mark at the pre-market session, and then all we need to see is a break above or below. So right now, currently no entries. We got rejected heavily off that pre-market high. Well, not pre-market high, not really like that, bro. But right now we're getting rejected heavily, as you could tell, and now we broke below that pre-market low. So after 7 a.m., 10 a.m. EST, we are on the 5-minute time frame. So check this out. We're on a 5-minute time frame now. All we need to do is wait for a break. All we need to wait for is a nice PC candle and a nice trend. So check this out. Is there any PC candle setting up? Yes, there is. Check this out. So this is the exact same example I was talking to you guys in the slides. So right now the stop loss is over $1 wide, $1.30 wide. It's not that bad. So we're gonna be watching this zone. We're gonna keep an eye on this zone. So we always have to look at a specific zone. Right now I'm currently looking at 248.5. So what you want to see is a break below 248.5, and if the bids and asks break, you can essentially take that towards the downside. So I also live recorded this video, this live trade. So I'm gonna show you an example. I'm gonna show you this live trade.
Keep an eye on this. Let's see. Once it get below 248, over $1 stop loss.
In the bids and ask.
240.
So all you need to see is a break below the zone and watch the bids and ask break. So wait for a second. It got into the zone right now. Check this out. It's getting into the zone, kind of consolidating. All right, check that out. All right, I'm pretty sure I answered it right there. Did the bids and ask break? Look how tight the spread is getting right now. That's essentially the bids and ask breaking in real time right there. And look at that trade. Look at this trade. It absolutely freaking went. So simple PC candle setup. All you need to look for is a breakout below or above the pre-market session, and then wait for a specific setup like this one. So not all the time the market is going to give you stuff like this. Sometimes the market is going to be really choppy, so you always have to be careful. So take advantage of the trendy days, and essentially the market will feed you. So let's move on to the next example. So let's move forward. This is an example of Nvidia pushing towards the upside. So right now what you want to see is a breakout above the pre-market high or pre-market low for the first 2 minutes, for the first 30 minutes of market open. So right now I'm gonna mark out the pre-market high and pre-market low, and essentially just mark out the zone. So now that you have the zone marked out, just wait for a nice little breakout out of this. Is there any Pac-Man candle nearby? No, this is not contained. So we're getting rejected heavily off this level randomly, and then we just need to see a breakout above. So it's already 10 a.m. So all you need to see is a nice Pac-Man candle, nice little trend. Speaking of a nice little trend in a Pac-Man candle, bro, look at this, a nice little trend in a Pac-Man candle. I just popped out of nowhere, bro. Jeez. So all you need to see is a breakout above the zone specifically you are watching, and then you could wait for the bids and ask for 5 seconds to get lifted towards the upside, and essentially you can take it towards the upside. So I'm gonna show you an example of what you need to see in the bids and ask in order for you to take the trade. So check this out. The Nvidia is right here on top, right here, sorry. It is right there, and all you need to see is a nice little breakout above the zone and just count for 5 seconds, and the bids and asks to get lifted. So that's essentially it. Gone into the zone, and then essentially all you need to see is the spread to get a little wider. That's how you know the bids and asks are getting lifted. So right now the spread is like 1 cent, 2 cents. That's the bids and asks getting lifted right there, kind of holding that position right there. Just wait. All right, got into the zone once more right there, and then essentially all you need to see is the bids and asks get lifted for at least 5 seconds and hold that position, and you just saw the bids and asks get lifted. The spread got a little wider, 2 cents, and that's essentially where you would enter right there. So the purple line right there, that's the 200 moving average. So check this out. Look how the trade played out. Essentially we got rejected off that 200 SMA. We got above We keep on getting rejected off that right there. And essentially we took profits right at the top, because honestly, you always have to keep in mind that the 200 SMA is right there to help you. The 200 SMA is basically where price will most likely reject once more. So in the next example, I'm gonna show you an example of when not to trade again. So I hope you're liking the video so far. I hope you learned a lot. So let's move on. All right, so moving forward, this is an example of when not to trade. So right now, what I want to see is a breakout above or below the pre-market session. As simple as that. All you need to see is a breakout above or below, a nice trend, a nice Pac-Man candle, and then you can essentially take it towards the downside or upside, depending on where it's going. So right now, typically no trends right now. We try to break below the pre-market low. Right here, we try to keep on going below the pre-market low, but essentially no real trends. So this is why I tell you, this is what I tell my people. Take advantage of the trendy days. Do not be scared. So a lot of people wake up and think, yo, I'm gonna risk my whole account today, bro. And then they end up having a day like this. It's really, really choppy, and they end up taking a trade. And they either win it, luckily, or they lose it. They lose it all. So be careful, guys. Take advantage of the trendy days, like the examples I showed you guys before. So I hope you guys liked this video. I hope you guys learned a lot. So let's move on to the outro. So that is essentially what I do for the first 90 minutes to market open. I hope you guys learned a lot in this video. If you want to follow me on Instagram, TikTok, I'll put my links, I'll put my social media down below, and I'll catch you guys in the next video. Let's get like 20 likes on this video. Please subscribe to my channel if you want to see more content like this, and see you guys.